Hello everyone, good morning. Welcome to today's lecture. So today we are going to discuss rest of the portion of the audit committee LODR regulations. Okay. Yesterday, just a quick recap. What we discussed is yesterday we discussed about the audit committee regulation 18. We discussed about the section 177 in detail. Then we discussed the part C of the SEBI LODR regulation, wherein what are the roles of audit committee and what information they need to review. Then we went and reviewed like resignation from auditor. There was a circular in which provided that how the auditor is required to resign, what are the roles and responsibilities with respect to the resignation by auditor. Then we discussed about other aspects of the resignation. We discussed some MCQs. We saw the annexure one, annexure A, wherein the details are required to be provided. Okay. Then we discussed about board of directors, appropriate composition of board, then meeting of board of directors. So, and we saw some MCQ also. So that we discussed in the last lecture. Now, what we are going to do is I'm going to take forward and we will be starting with the board of directors. Now, what should be the appropriate number of maximum number of directorship, committeeship by a board of directors? Then we'll go to the nomination, remuneration committee and other committees. Okay. Now, so we saw the composition of board of directors. Okay. Now, what we need to see is, first of all, what board of directors are required to do. What is the role of board of directors as per the SEBI LODR regulations in a company? See, board of directors are very, very important in a particular listed entity. Reason because, or in any entity basically. Reason because the task they need to perform and the output of the task. So they are the driving hand. They need to guide the whole organization. They need to review in detail everything, and they will be are the ones who will be setting the tone at the top in an organization. Okay, it's a very, very important position in a company, and that's why their responsibilities which are there or even defined in SEBI LODR are in line with those goals and those ideas that they are the tone at the top. Okay, so now what I say is that the board of directors shall periodically review the compliance report pertaining to all laws and regulations, because laws and regulations, compliance to laws and regulations is very critical. If there is a single non-compliance, then also the company can pay huge hefty amounts of penalty. So the first point is that they need to periodically review the compliances with laws and regulations. Okay. Then what they need to do is they need to check whether all the plans, okay, for the succession of the board of directors. So today I am the board of director. I am on the board. What is the plan that for my succession? Who will take a place tomorrow on my, once I retire? So they need to decide a plan, okay, for orderly succession or appointment to the board of directors. Okay. Plus, they should be, guiding, or you should be preparing a document, or they should be, a procedure that, okay, when one resigns or once there is an emergency, let's say, for example, some director died. Now, what to do? How to replace? Okay, even a key managerial personnel. For the key managerial personnel, let's say, for example, CEO, CFO, there is a sudden death of CEO. What you will do? What board needs to do in that particular place? So there should be a plan in place for that. Okay, they should lay down a code of conduct for all the members of the board of directors, that okay, how basically they need to act in a company. Okay, they need to lay down a code of conduct for independent directors also. See, the duties of the independent director are a bit different compared to the duties of our normal non-executive directors or directors which are not independent. Reason because there are additional responsibilities on independent director. They need to review things independently. Okay. So they need to lay down the code of conduct for the duties of independent director. Then now the board of directors shall need also needs to recommend fees or compensation. Okay, this is required to be paid to the non-executive directors, independent directors, and that is then will be approved by the shareholders in general meeting. So first they will recommend fees. Okay, this is the fees that we will be paying to the non-executive. This is the fees we will be paying to the independent directors. Then these both will go to the shareholder and they will get approved. So board is the one which represents the fees. Okay. Now this approval requirement will not apply. So there is an exception to this approval requirement. Basically, this approval requirement will not apply if payment of sitting fees is within the limit which is defined in the Companies Act. Okay, and and that is to the non-executive directors. If that is within limit to the non-executive directors as per defined threshold in the Companies Act, then no need to obtain approval of shareholders. So approvals of shareholder in general meeting not apply when payment of sitting fees to non-executive director is performed, if made within limit prescribed under the Companies Act. Okay. Even like, for example, if there is a payment of allotment of stock options to any of the non-executive director. Now, if there is an allotment of stock options to non-executive director, then the limit that how much stock options we need to provide to a particular non-executive director in a financial year in total is required to be approved by shareholders. So limits for maximum number of stock options need approval of shareholder for a financial year in aggregate, in total. Okay. Now, these are certain things that are with respect to, the roles that they need to play with respect to the, what do you say, stock options or review of compliance reports, deciding the remuneration. That's a very important task that they need to perform. Okay. Now, we will be talking about remuneration. Okay. So that is something now we will be talking about remuneration. Okay. Now, there are certain conditions specified for the remuneration in SEBI LODR also. See, whatever we are discussing is for the corporate governance, good corporate governance. Okay. Now, when I talk about good corporate governance, what is the scenario is that this ensures that all the directors are paid appropriately. Okay, there is no biasness with respect to the payment of remuneration to any of the director. Okay, and that's why these guidelines are prescribed. So what these particular guidelines say that the directors are required to obtain approval of shareholder, that is to by special resolution every year when the annual remuneration that is payable to a single non-executive director exceed 50% of the total of the remuneration payable to the all non-executive directors. So I'll explain this with an example. Okay. Let's say, for example, Mr. X, Mr. Y, Mr. Z, Mr. A, Mr. B. Okay. let's say there is one more Mr. C. So he's a non-executive director. He's also non-executive director. He's like not a non-executive director, so I'll keep it dash. So he will be executive director. Again, dash executive director, non-executive director, and non-executive director. Okay. Now the amount of remuneration they are getting. Okay. The amount of remuneration they are getting, so I'll be mentioning over here. So Mr. X is getting, let's say, for example, 25 lakhs, 10 lakhs, 30 lakhs, 35 lakhs, 10 lakhs, or let's make this as a 20. $25 lakhs. Okay. Now, so what provision says? Provision says the approval of shareholder by special resolution shall be obtained every year in which the annual remuneration payable to single non-executive director exceeds 50% of total remuneration payable to all non-executive directors. Okay, that is a provision. Now, as I told you earlier also, that how remuneration works is, first director recommend the remuneration with board of directors for the non-executive and for the independent, and then that remuneration goes with the shareholder for the approval. Now that approval will turn to a special resolution when these conditions are fulfilled. In this case, do you think we require a special resolution for the remuneration of Mr. X? Yes or no? So Mr. X, will Mr. X, remuneration requires a special resolution? Come on, guys, pretty easy. What we discussed just now. Sorry. Pretty easy, whatever we discussed just now. Do you really think that, remuneration of Mr. X requires special resolution? Correct, Dityaman. Correct, Boni. So, when a remuneration requires is if the payment, okay, like exceeds 50% of the total payment of non-executive director, then it is required. So what is the payment to all non-executive directors? 20, 10, then 10 over here and 25 over here. So 40, 65. So half of the 65. If the payment increases to the half of the 65, then only we are required. So what provision says is, if amount payable of remuneration to single non-executive director exceeds 50% of the total annual remuneration payable to all non-executive directors, then only. So total payment is 20 plus 10 plus 10 plus 25 is equal to 65. And half of that, 50% of that, if any remuneration exceed this amount, basically 32.5, then okay, we will require special resolution. Otherwise, our normal resolution, okay, will do fine. So no special resolution required. No special resolution required. Here also same. Here also same. Now in the case of Mr. A, the amount is 35 lakhs, which is more than 32.5. Do we need special resolution? Pretty easy. For Mr. A, do we need special resolution? If yes, then why? If no, then why? So I want with reason. Correct, Bonnie? Correct. Come on, guys, pretty easy. Absolutely correct, Britman. Correct, Mani. So he's not a non-executive director. We are only talking about as of now non-executive director, and hence it's not applicable to him. Same with Mr. Z. So not applicable, not applicable, no special, no special. Okay. Now let me revamp, change the numbers and we'll discuss again. Okay. I'll change the numbers and then we'll discuss again. So let's say the remuneration received by Mr. X is rupees 10 lakhs, 20 lakhs, 35 lakhs, 10 lakhs, then 10 lakhs, 45 lakhs. Okay. Now you tell me whether any of the directors in this list requires a special resolution for their remuneration. Any of the director. Absolutely correct, Manini. Correct. So here 50% of the total remuneration. So total remuneration 10 plus 20 plus 10 plus 45. This will be the total remuneration 85, and 50% of that 42.5. If any payment more than 42.5, that is 45, will require a special resolution. Okay, pretty simple, nothing difficult here till now. So that's the provision which says that special resolution shall be obtained every year for the remuneration payable to a single non-executive director when that remuneration exceeds 50% of the total annual remuneration payable to all non-executive directors. Okay, so that is the provision. I hope everyone is clear. Any doubt till now? Any doubt? Okay. Now, then comes to the independent director. Remuneration to independent director is allowed, but independent directors are not allowed to have any stock option plan. So you cannot provide any stock option plan to independent directors. Okay. Now, like, I'll tell you the reason why it is so. Why you are not allowed, independent directors are allowed to have any stock option plan. Okay. So, any guesses why independent directors are not allowed to have any stock option plan? Any guesses or any you want to answer it? So there is a good question also. Why this limit is only for non-executive directors? Why this limit is not for the executive directors? See, there's a difference between both. If they are the non-executive director, okay, and still if they are getting good amount, means there is something different, which is points other ways, other like on the other direction compared to the corporate governance. So for example, if a non-executive director is there and he is getting paid from 50 for an amount which is more than 50% what we are paying to all other non-executive directors, then there is a chance that that might be a related party or might have interest or something might be there. That's why in such scenarios it requires special approval. Okay. Now let's come back to this one, independent director. Why do you think any stock option plan is not allowed for an independent director? Why? Okay. So yes, absolutely correct. If he starts to hold stock option plans, then he will be interested in the company. Then how we can say that he's an independent director? Absolutely correct. Soham, Diktaman, Boni, Manini. So that is the definition itself provides that independent director. Okay, like in the definition, if you go to the definition of the independent director, okay, that's in the regulation 16B, okay, of the SEBI LODR regulation. The regulation itself says that that who is apart from receiving director's remuneration has no material pecuniary relationship with the listed entity or its holding or its subsidiary or associate company, okay, or to the promoters or other directors from or during last 3 preceding financial years, also in the current financial year. Okay, so that is there itself in the what do you say, in the definition. So if you want to see the definition for independent director, you can go and visit regulation 16.2 of SEBI LODR. Okay. Now, the next one is compensation that is payable to the executive directors, or basically directors who are not a non-executive directors. Okay. Okay. So For the compensation that is payable to the executive directors or members or the members of the promoter group shall be subject to the approval of the shareholders by special resolution. If there is a condition, okay, the condition is if the annual remuneration payable to such executive director exceeds 2.5% or 5 crore rupees, okay, or when you have a multiple executive directors, then if exceeds that, if more than one executive director, then total remuneration exceeds 5% of the net profit of the listed entity, okay, then you require to obtain special approval. So if total remuneration or annual remuneration to non-executive director, executive director exceeds 5 crore or 2.5% of net profit, whichever is higher, then you are required to have a special resolution for from shareholders. If there are more than one executive directors and total remuneration payable, the aggregate annual remuneration payable exceeds 5% of the net profits, then you require a special resolution. Again, I'll go back to the example. Okay. Now let's say net profit of the company is 2 crores. You tell me what is the what is the current scenario, like whether they require special approval or not. Whether the special approval is required or not. Same example, net profit is 2 CR. Do we require special approval? Do we require a special approval? Okay, Boni. Okay, Manini. Correct, Soham. Okay. Let me go back and discuss the regulation again with detail. Focus on this particular word. Exceeds 5%, 5 crore or 2.5%. Exceeds 5% of the net profits. If it exceeds, then we are required to have. In current example, if it exceeds 5% or 2.5% or 5 CR, whatever limit will be applicable. Okay, first tell me which one is applicable, 2.5 5 CR or 5%? Correct, Soham, Dityaman, Manini. Which limit you applied, 2.5% or 5 CR, or another one is the 5%? Correct. Okay, good. See, simple thing. If there are more than one directors, more than one such directors, the aggregate annual remuneration director should not exceed 5%. In our example, it's not one, it's more than one. So we'll be checking 5% of total annual payable, 5% of the net profits. So net profit, so it will give me 10 lakhs. If any remuneration exceeds this one, then I am required to have a special resolution. Clear? So it is 5%. Not the first one, because there are more than one such directors. Okay. I hope it is clear. Any doubt? Okay. Any doubt till now? Understood. Okay. Now this particular approval, okay, will be valid only for a year, or sorry, not a year, till the time the term of the director is not getting expired. So it will be valid till the time, till the expiry of the term of the director. So once the term of the director has expired and he has been reappointed, then at that time, this approval is required to be taken again. Okay. Now, the next is maximum number of directorship. Under this, under the maximum number of directorship, what is required is how how many directorship a director can have. Okay, so that is we are going to be discussing in this particular part. Okay, so there is one question: if there are more than 5 directors, then we do not need to see the individual limits, just 5% of the net profit. Answer is yes. If there are more than one such director, more than one executive directors, then you are required to see the 5% limit. So, okay, I'll take the same example and I'll reframe the numbers. Let's say, for example, in this one only, this is 15 lakhs. Sorry, not this one. Apologies. Oh, yeah. This is 10. So we don't require. Now this is 35. This is 35 over here. Okay. Now this 35 requires special resolution, and this 10, because it does not exceed the 10 lakhs, doesn't require. Okay. So if it exceeds the limit, it requires. If it does not exceed the limit, then it does not require. Simple. So here there are more such directors. I need to see 5%. This 35 lakh is more than 5%. I require a special approval, special resolution. But this 10 lakh does not exceed 10 lakh. That's why I don't require. Clear? So for the each and every director, you are required to see on his individual basis that whether his remuneration is exceeding 5% of the net profit when you have more than such directors. Individually, yes, we need to check. So let's say if you have a, let's say for example, another also, executive director. Let's say Mr. J, he is getting, let's say, rupees 15 lakhs. Okay. Now I need to again check at the individual level whether this 15 lakh is more than 10 lakh. Yes, then I need a special resolution. Clear? Okay. Maximum number of directorship. Maximum number of directorship a director can hold. Okay. So what SEBI LODR says in this regard, that the director of listed entity, okay, cannot be director in more than 8 listed entities. That was earlier in till 2019. Then that in 2020 that was made 7. So as of now, what we are required to do is we are required to follow the limit of 7, not 8, because that is with effect from 2020, 1st April 2020. So not more than 7 listed entities, he can be a director. So that this April 1 is already done. Reason because that time limit has been passed. Even 2020 has passed. So now it is 7. Okay. So a person shall not be director in not more than 7 listed entities. and he shall not be independent director. He shall not be an independent director, okay, in more than 7 listed entities. Okay. So he shall not be director in even in 7 listed, including the independent director. So as an independent director in 7 listed entities. Okay. Now comes to the next part, that is managing director or whole-time director. Now see, managing director and whole-time director are the directors which provide their full time to a company. They are fully engrossed in the company. Okay, they're fully managing a company. So the limit of the whole-time director or managing director is comparatively at the lower limit, because you cannot give full times to so many companies. You can give your full time to either 1 or 2 companies. Okay, that's why the whole-time director or managing director can be, whole-time, can be, independent director in not more than 3 listed entities. So if you are serving as a whole-time director, managing director in any listed entity, then you cannot be an independent director in more than 3 listed entities. Clear? Okay. Just to summarize, director cannot be director in more than 7 listed entities. Okay. Now, if that director is independent director, okay, if the director is an independent director, okay, and we need to check another condition, which is whether he is full-time director or managing director in any listed, okay, in any listed entity, If yes, then maximum number will reduce to 3 listed entities. If not, then the number will remain to 7 listed entities. Okay. So if a director cannot be more than 7 listed entities, if he is an independent director, then we need to check whether whole-time director or managing director. If yes, then 3 listed, otherwise 7 listed. Clear? Okay. Then other than this, there is a specific requirement also. Now we were talking about the maximum number of directorship. Okay. Now there is another requirement with respect to maximum tenure of an independent director or maximum number of positions, or you can say part of committees. Okay. So I'll bring that down. Oops. Okay. Okay. Now, for the purpose of this calculation, we need to only count entities whose equity shares are listed on the stock exchange. If anything else is listed, then we are not required to be counted. So listed entity whose equity share are listed on the stock exchange. Okay. Great. Okay. Now comes to the maximum number of committees, committee membership a director can hold. Okay. Now, so there is a regulation 26. Regulation 26, which specifies the obligation of senior management, key management personnel, and directors. So it defines what is the obligation of the directors. Now that particular regulation says that a director, okay, a director cannot be member, cannot be a member in more than 10 committees. In more than 10 committees. Okay. Or cannot act as chairperson in more than 5 committees. Okay, 5 committees. Now this whole limit is across all listed entities, across all listed entities. Okay, So a director cannot be a member in more than 10 committees, or he cannot be a chairperson in more than 5 committees. Okay. Now, when I talk about listed entities, as usual, private, foreign companies, companies of Section 8, okay, they are excluded from this. And for the purpose of this, what I need to count, for the purpose of determination of this limit, okay, of chairmanship or membership, I need to consider audit committee and stakeholder relationship committee. So I need to consider audit committee and stakeholder relationship committee. Okay. So I'm not required to count any other committee for the calculation. I am only required to count audit committee and stakeholder relationship committee. So for the purpose of determination of limit, chairpersonship or membership of the audit committee and stakeholder relationship committee alone shall be counted. Alone. Okay. I'm not talking about any other committee. Only these two committees are there for which I am required to count. Clear? Any doubt? Any doubt? Okay. Now, very good question. Okay. So, for other, where we are talking about listed, earlier we talked about listing where equity shares are listed on a stock exchange, not debt or anything else. So in other cases where we are talking about listed entity, is debt included? See, it depends upon case to case basis. So in every regulation, they have specified their own, version. Somewhere you find listed, which includes debt. Somewhere you find listed, but which does not include any debt. So for example, okay, when I talk about this, all listed entities, here there is an exclusion that I was about to cover now. High value debt listed entities are excluded. So across all listed entities, but excluding high value debt listed entities. So if there is a company which is high value listed debt entity, okay, over there, this I'm not required to count the limit. So the limit of the committees on which a director may serve in all public limited companies, whether listed or not, shall include all other companies except, basically it says that except this one. Okay. So high value debt listed are excluded. Now, every director is required to inform this particular position. So every director is required to inform this particular position. So what is the position? Okay, this position. Okay. To board and shareholders. So every director shall inform the listed entity about the committee position he or she occupies, okay, in the listed entities, Okay, and the number which is not exceeding this 10 and 5, so that if they want to nominate for any of the committee, they should be aware, okay, we can nominate because still he has that particular limit available. Clear? Any doubt? Any doubt till now? So that was maximum number of directorship and committee holding, basically. Any doubt till now? Okay. Now, there is another thing that I want to discuss over here is, okay, which is that that the maximum number here that we are talking about, 10 or 5 of the committee. Okay. Now, that is required to be seen not only once, but on a continuous basis. So, for example, okay, it may happen that, we are a member for a particular year. So, every year or every time, you become a member, you need to check whether this particular, limit is being crossed or not. Okay. So accordingly, you need to check whether this is limit getting crossed or not, or whenever you become a part of a committee. And whenever I'm talking about here, it's not a non-executive director or independent director or any such thing. I'm using the plain word director. So do not confuse with the word independent director or non-executive director. Sometimes you may get a question that, okay, this independent director is like this has much committee, for non-executive for this much. So you may get confused whether this was applicable to a director, independent director or non-executive director. This is plain director, which includes every type, independent, non-executive, everything. Okay. So I'm talking about a director. I have not bifurcated to any independent director or non-executive director for this particular purpose, for this particular section. I hope it is clear. Okay. Then I'll be talking about position with respect to the chairperson and managing director. Okay. So what is the scenario over here is that the managing director and chief chairperson, managing director or chief executive officer. So in a listed entity, okay, now the listed entity may appoint separate persons to the post of chairperson, managing director, chief executive officer, such that, and it should be in such a way that the separate person, out of the separate person, chairperson shall be a non-executive director, and he should not be related to managing director or chief executive officer. So they need to appoint separate person, but that separate person should not be like chairperson should not be should be a non-executive director and should not be related to managing director and chief executive director officer, sorry, chief executive officer. Clear? Any doubt? Okay. Now, this we discussed about the maximum number of directorship and maximum number of committee for the board of directors. The next topic I want to discuss is nomination and remuneration committee. But before that, what I'll suggest is, let us see if we can take a quick question just to enhance our understanding about this particular topic. Okay, let's take one question so that we can have a better understanding of this particular topic. Now we need to comment on the following. Okay, as per SEBI LODR. Now this company is listed company among top 1,000. Where board consists of 20 directors with a non-executive director as its chairman. One non-executive director has attained the age of 70 years. One of the director is the director in 8 other listed entities. Okay. Now we'll go one by one. So let's talk about the first one. You need to comment on each of the one. So one non-executive director has attained the age of 70. So which provision and which regulation will be applicable, and what will be the issue, if any? So what will be the issue, if any, and one by one we will discuss. See, with respect to the directorship, there is a doubt. Are directors required to inform about the position every year? They are required to inform whenever there is a change. It can be multiple times of a year, but whenever there is a change, they are required to inform. Come on, guys. Pretty easy. One director has attained the age of 70. Come on. Pretty much simple. Good, Ditaman. Okay. Good, Shrishti. Come on, guys. Pretty easy. We have already discussed this. In last lecture, we covered this particular portion. We already covered this particular portion in last lecture. So a director who has attained the age of 70. So what is the issue over here, and how you are required, which particular regulation you are required to comment over here, based on which regulation? Okay. So When I talk about one non-executive director has attained the age of 70, I'll go back, I'll check the regulation 17, wherein no listed entity shall appoint a person or continue the directorship of any person as a non-executive director who has attained the age of 75 years, unless a special resolution is passed. Now the limit is 75, not 70. This is less than 75. If less than 75 years, no issue. I need a special resolution once he crosses 75 years. Till 75, I'm fine. So he's 70, he still have 5 years. Okay. Second, one of the director is a director in 8 other listed entities. One of the director is a director in 8 other listed entities. Good morning. So he is a director in 8 other listed entities. Come on, guys. He is a director in 8 other listed entities. See, here, if you see 8 other and this director in this entity. So total 9. Okay. 8 other plus this one. So 8 plus 1, 9 listed entities. Total, he is a director in 9 listed entities. Correct, Rahul. Correct, Boni. Correct, Soham. So in the current case, just now we saw maximum number of directorship, wherein he cannot be more than 7 listed entities. Director in more than 7 listed entities. We are here, he's in the 8. Sorry, 9, even that. Where it is, sorry. Yeah. 9. Not good. Contravention. Okay. So maximum 7 allowed. The managing director is serving as an independent director in 4 listed entities, of which 1 entity equity shares are not listed on stock exchange. 4 listed entities, 1 of which shares not listed. Come on, guys. Four managing director, serving independent director, 4 listed entities. This is not other or anything. So total 4, out of which 1 doesn't have shares listed on stock exchange. What is the issue over here? What is the issue over here? And which provision we are referring over here? Correct, Ditaman. Correct, Boni. Pretty simple. So is there any issue? Correct, Manidi. Now what provision says? A director who is a managing director or a whole-time director, okay, serving as a managing or whole-time director in any listed entity shall serve as an independent director in not more than 3 listed entities. But these 3 listed entities, okay, the listed entity does not cover entities whose equity share are not listed on a stock exchange. So we are only required to cover equity shares, listed entities, equity shares, if they are listed on a stock exchange. Okay. So in the current case, managing director is serving as an independent director in 4 listed entities, one of which equity shares are not listed. So we will be counting 3, which is fine. 4 minus 1, 3, and max 3 allowed. Okay. Then the non-executive chairman is a promoter of the listed entity, which has 9 independent directors. The non-executive chairman is a promoter of listed entity, which has 9 independent directors. We discussed this in last lecture. So this was discussed in last lecture. Just one thing. When I say, like when I discuss that, managing director is serving as an independent director, like if or point number 2 or point number 3, okay, like director is in the 8 other listed entities, or he's serving as an independent director, okay. Now that is something not allowed. You cannot even validate with a special resolution in those cases. For the age one, yes, we require a special resolution that can be, move forward with a special resolution. In the current case, for the independent directorship, or for, not more than 7 listed entities or not more than 3 listed entities, even special resolution cannot validate there. So if you say that, okay, we will obtain special resolution, no, that's a contravention. You cannot validate a contravention with a special resolution. Only there was a specific section of age where a special resolution we were discussing, or there is one or more another, regulations. But in rest of the cases, that's a contravention. You will be, liable for the penalty and imprisonment. Like there are penalty defines. So whenever in the point number 2 and point number 3, it's a contravention. We don't require a special resolution. Now, point number 4, non-executive chairman is a promoter of listed entity which has a 9 independent directors. Come on, guys. 9 independent directors, promoter, chairman, something in the last lecture. We discussed in detail. We discussed that in detail in last lecture. Okay. Let me go back to the provision. Now, what we discussed in the last lecture, composition of board of top 1000 entities. It should be such a way that it should have one independent woman director. Okay, now, then we discussed that chairperson of the board of directors, if he is a non-executive director, then 1/3 of the board should be independent. However, if he is related or a promoter, then half of the board should be independent. And 50% of the board should be non-executive directors. In the current case, the chairman is a non-executive director, but he is a promoter. Chairman is a non-executive chairman, but he's a promoter. And it has 9 independent directors. Now, when a chairman of, it's a promoter being a non-executive director, what is the that board composition? Half, more than half should be. So if you see the wordings, it says that if the chairperson, okay, if the chairperson is a promoter, then at least half of the board should be independent. At least half. Should be independent. Okay. Now, in this case, what is the board total? That is 20 directors. Now, if the chairman is a promoter, then half of 20, that is 10, should be independent. At least 10 should be independent. Now, how many independents are there? 9. If that is less than 10, hence contravention, non-compliance. So, non-compliance. Correct, Soham? Correct, Manini? Clear with point number 4? So the ones which are the contravention is 2, 3, 4. 1 which is good, that is 1. Like the first one was the good. Second, third, fourth, there is the contravention. Clear? Any doubt? Okay. Last one. One independent director has been serving independent director. One independent director has been serving independent director in 8 listed entities, of which equity shares are listed on stock exchange. This should be easy, trust me. That should be easy. Correct, Dittaman. Correct, Boni. Come on, guys, pretty easy. Correct, Mani. So again, for the independent directors also, the limit was 7. Now, if he is into 8 listed entities, then a problem. So maximum 7. Okay. Here, so contravention or non-compliance. Okay. Now I'll add upon certain things over here. Other than this, I'll add by more. Okay. One, board of directors met on the following dates. So in FY21, 21-22. Okay. So board of directors met on the following dates in FY21-22. 01/05/2021, 31/10/2021. Okay. Then 31/1/2021. Okay. So on these dates, board of directors met. Number two. Along in this only, I'll add such some things. Okay. So it was a date of meeting. Members present and independent directors present. Okay. So on these following dates, okay, on these following dates, I will be mentioning how many directors were present. Okay. And what is the basically independent directors ratio in that particular meeting. Okay. So on first, like 10 members were there, means 10 directors were there, none independent. Then 5 were there. There were 3 independent out of them. And on 31st, 6 were there, where again, 1 independent. Okay. So this is a particular scenario. Okay. The one. Board met on these following dates in FY21-22. On each of the date of meeting, board of directors meeting, this was a member present and independent director present. One by one, tell me what is the issue. Or if there is nothing, then fine. If there is any contravention or non-compliance, you need to specify with detail which non-compliance we are talking about. We discussed this in last lecture in detail. Absolutely correct, Ditaman. Absolutely correct, Shrishti. That's one of the things. Absolutely correct, Manini. Correct, good, Manini. Okay, so let's discuss. Okay, now let's go to the first dates. Is there any issue in this? Is there any issue in this? Yes, there is an issue. The issue is first one, that most of you already identified. Gap between two meetings. This should be not more than 120 days. It is here more than 120 days. Problem. What is the other issue? What is the other issue over here? I'll tell you there is one more. Consider as a hint. I'll tell you there is one more issue. With respect to the dates. One more issue with respect to the dates. Correct, Dittaman? Keep the director portion aside. There is one issue with the dates more. Oh, sorry. There is one mistake on my side. That's not 21. That's 22. Thank you for pointing it out. So yeah. So another issue in this is, correct, Dittaman, there should be 4 meetings at least in a year. We are only seeing 3. Where is the 4th one? There is no 4th one. That's an issue. The provision says, or the regulation says that the board, regulation says that that board of directors shall meet at least 4 times a year, at least 4 times a year, with a maximum gap of 120 days between 2 meetings. I cannot see 4 times a year over here. I cannot see 4 times over here. So that's a contravention, again, non-compliance. Okay. So that's a non-compliance again. Correct? Correct, Soham? Yes, correct, Dittaman. Correct, Srishti, Manini. That is a two things here. One, they haven't met 4 times. Number 2, the days limit is more than 120. And that's why if you meet 4 times in a year, there's a hardly some chance that you will not comply with the 120 days. But most of the time, if you meet in a 4 times in a year, you will comply with the 120 days. Unless and until for the first time you are meeting very early, for the second time you are meeting very late in the span of that particular quarter. Okay. Now, second, members present. Let's focus upon the members present. Second part. What is the problem you find over here? Or what do you think it's not appropriate? What is the problem you identify in these members present? Okay, Manini. We'll come to the independent directors part later. Just now focus on the members part. Okay. I'll tell you. If you see, the requirements of the quorum, it says that for top 2000 listed entities, one of this one, okay, the quorum should be 1/3 of its total strength, 1/3 of its total strength, or 3 directors, whichever is higher. 1/3 or 3, whichever is higher. What is the total strength for this particular question? We discussed the total strength is 20 directors. Okay. Now, 1/3 of 20. It will give you to 6.67 or 6.6667. Okay. So if we'll do 1/3 of 20, what it will give? 6.6666 continuous 7. Now, for I cannot, ask a director to be present for the 0.67. Please be present 0.67. I don't require rest of your 0.33. Doesn't make any sense. So the quorum for this particular meeting will be 7. Okay. Or 3, whichever is less. So 1/3 will be the 7 or 3, whichever is higher. 7 or 3, whichever is higher. So that will be 7. Now the quorum required is 7, 7, 7. In these two cases, it's not satisfying. So the quorum was not there. Meeting shouldn't have happened. So meeting number 2, meeting number 3 doesn't have a required quorum to conduct. Okay. So meeting number 2, meeting number 3 doesn't have a required quorum to conduct the meeting. Clear? Okay. So this was the one. Now coming to the third part. Independent director present. This is pretty easy. And some of you have already highlighted that the quorum requirement is that along with, so this is the quorum requirement that we were discussing, 1/3 of its total strength or 3 directors, whichever is highest, at least with 1 independent director. Now in our example, in first of the case, there should be at least 1 independent director. And hence that's an issue. For the rest of 2, we have a good amount of independent directors, so that is fine. Hence, these are the contraventions or non-compliances with respect to the regulations. Clear? Any doubt with respect to any of the question over here? So we discussed 4 meetings, 120 days gap, quorum 1/3 or 3, and we discussed 1 independent director. Okay. What I suggest is, let's take a quick 10-minute break. After the break, we gather back and we'll continue with the rest of the regulations. Okay. Let's take a quick 10-minute break. Okay. So welcome back, everyone. Let's continue the discussion and the details on the regulation one. So we saw a very good example right now. Okay. Now what we will do is we will continue with the rest of the topic. Now the first topic I want to take is with respect to the regulations with respect to subsidiary, material subsidiary for the listed entity. So what is the scenario is, as I said in the start, this is pertaining to the corporate governance. Now, in this corporate governance, what is the scenario is that listed entities which are holding companies, okay, listed entities which are holding companies have a, you can say, a requirement or their role or it's their their role to look after for the material subsidiaries. What is the transaction happening in the material subsidiaries? So corporate governance requirement with respect to material subsidiaries. Material subsidiaries of listed entity. Now that is the regulation 24, and very important because this defines that, okay, what is the listed entity's role with respect to its material subsidiary, how listed entity can help his material subsidiary and management of material subsidiary over here. Okay. So first requirement, that at least one independent director should be there on the board of directors, okay, of the material subsidiary from the listed entity. So one independent director on the board, okay, on the board of unlisted material subsidiary shall be an independent director which is on the board of the listed entity. So now again, I'm talking about at least. You can have more, that is there, but at least one independent director who is already on the board of director of listed, who is on BOD of listed, shall be a director of an unlisted material subsidiary. Okay. Now the question comes is that, again, if you emphasize, I'm talking about an independent director of listed to become a director on unlisted material subsidiary. Independent director of listed to director, not independent. I'm not talking about independent to independent. I'm talking about independent to normal director. Okay. So independent director on listed to be a director on the unlisted. First. Second, I'm talking about material unlisted subsidiary. Focus on the word material, not all. Okay, I'm not talking about all unlisted subsidiaries. I'm talking about material. Now, what do you mean by material? What is material over here? When I talk about material, Okay. A material subsidiary is a subsidiary whose income or net worth, exceeds 20%, of the consolidated income or net worth. Exceed 20% of the consolidated income or net worth in immediately preceding year. Now, in immediately preceding year, not current year, not any last 3 years, last 4 years, nothing. Immediately preceding previous year, if the income or net worth exceeds 20% of the consolidated income or net worth, you are material then. Clear? So at least one director from the board of the listed to be a director on the unlisted material. That is the first part, very important one. Second, audit committee of the listed shall also review financial statement. Okay. Audit committee of listed shall review financial statement of, okay, shall review financial statement of unlisted subsidiary. Audit committee of listed company shall review financial statement of unlisted subsidiary. Now, again, I'm not using the word material over here. It's pure unlisted subsidiary. Then minutes of board meeting of unlisted subsidiary to be placed, okay, in meeting of BOD of listed. So minutes of BOD of unlisted subsidiary to be placed in the meeting of BOD of listed company. Again, I am using the word unlisted subsidiary, not material. Not talking about material, I'm talking about all unlisted. Sorry. Then the management of unlisted, okay, management of unlisted subsidiary shall bring or shall submit, okay, a statement of significant transactions and arrangements, significant transactions, arrangement entered into by that unlisted subsidiary, okay. A statement of significant transactions and arrangements to whom they should submit. They should submit this statement to the listed entities board of directors. So I'm talking about statement of arrangement and significant transactions, okay, to be submitted to board of directors of listed entity. Now the question comes, significant transaction or arrangement, how should I identify? What is significant over here? So if I need to identify what is significant, simple. If I talk about significant, significant means any individual transaction which or arrangement which exceeds or likely to exceed 10% of total revenue or total expense, asset or liabilities, or expense or assets or liabilities. If that transaction exceeds 10%, that's a significant transaction. Okay, and that is required to be disclosed in a statement to the listed entities, BOD. Okay, now this particular limit of 10% of total revenue expenditure is of, again, immediately preceding accounting year. So the numbers of immediately preceding accounting years will be used. So revenue of preceding year, revenue, expense, asset, liability, to identify whether the transaction in the current year is significant or not. Okay. Then this was with respect to the significant transactions of to be submitted by management of unlisted subsidiary. Again, I am not using the word material. The word material was only used at one place. In case of board of directors, that's it. I haven't used material word thereafter. I'm talking about all unlisted subsidiaries of a listed entity. Okay, so I'm not talking about material. I'm just talking about all unlisted subsidiaries. Then, like there is a requirement that the listed entity shall not dispose the shares of material subsidiary. Okay, listed entity. Okay, listed entity shall not dispose shares of material subsidiary in such a way that the shareholding, okay, of its own, either of its subsidiary together, okay, after the like shares, after the selling the shares, or after the reductions in share, becomes less than 50%, or the entity, listed entity, cease to exercise the control over the subsidiary. Now that can only be done by passing a special resolution in general meeting. So listed entity, if listed entity wants to sell or reduce holding in material subsidiary, material subsidiary, if they want to sell or reduce holding in material subsidiary below, you can say below 50%, or where listed entity cease to exercise control over your subsidiary. if they wants to sell or reduce holding in material subsidiary below 50% or where listed entity cease to exercise control, a special approval, a special resolution is required. Okay, is required in general meeting. Now, there is an exception to this. Now, exception is if that it's this particular whole arrangement of selling is under investment of divestment, which is approved by court or tribunal. Okay, or under insolvency, under insolvency plan, or under insolvency code that has been done. Okay, so in that case it is fine, it can be done without a special resolution. But again, in such cases, if you see, like even when you go for approval of such divestment plan, before going to the court or tribunal will ask for a special resolution. Or if you are going for insolvency, again there are a lot of resolution which are passed for the creditors, for so any which way that gets satisfied. But there is an exception as of now. Okay, then the last one is that if listed entity wants to sell, dispose, okay, or any of the asset which amounts to more than 20% of the total asset of material subsidiary, total or aggregate during a financial year, then they require a prior approval of the shareholders by special resolution. So if listed entity wants to sell, dispose, okay, and lease assets more than 20% of total assets, again of material subsidiary, okay, then they require a prior special resolution prior special resolution in general meeting to do that. Again, the same exception will be applicable to here also. The same exception is applicable to here also. If that list, if this is under divestment or insolvency, fine. Okay, any doubt till now? Okay, now there is one good question, which is with respect to this statement. Management of unlisted subsidiary shall submit a statement of significant transaction to listed entity. Now, what is the frequency of this submission? The regulation talks about periodically, but Periodically, if you talk about that, will become, either on each and every board meeting of listed entity, before each and every board meeting on listed entity, or as and when the transaction happens. Both is fine. So either at each and every, board meeting, that statement should be presented for each and every quarter. See how the entity does this. In case of listed entity, in case of, unlisted subsidiary, what they do is they prepare a list of significant transactions for a quarter, and that is submitted to the board meeting of the listed entity. Okay. And for in that particular quarter, that whatever board meeting is happening for that quarter, they will provide. So let's say, for example, in last meeting, I gave all the significant transactions till, let's say, 30th June. Board meeting happened in July. I gave till 30th June. So in next board meeting, I will give from 1st July to 30th September, something like that. So periodically, a statement is given for each and every quarter, whether there is any transaction or not. Any doubt? Okay. If no further doubts, then I'll move forward. So that was with respect to corporate governance. Okay. Corporate governance requirement with respect to material subsidiary of listed entity. Now, there are two more committees that I want to discuss. There are two more committees. In fact, three more committees I want to discuss. First is the nomination and remuneration committee. Nomination and remuneration committee that I want to discuss. Second, I'll be discussing, stakeholder relationship committee and then risk management committee. Okay. When I talk about remuneration, nomination and remuneration committee, this falls under regulation 19 of SEBI LODR. Okay. Now, there are certain, requirements to with respect to this particular committee. What should be the appropriate composition of this committee? What should be, the composition of the chairman, and how they should meet everything. Okay. So to start with, nomination and remuneration committee, as the name suggests, okay, this committee is constituted to nominate and to decide the remuneration. Okay. This committee is constituted to decide the nomination and the remuneration. Okay. It can be of board of directors. Okay. This committee will decide, okay, what should be the, who can be nominated to the board? What should be the remuneration of the board? Okay. So nomination and remuneration committee shall constitute of at least 3 directors. There should be at least 3 directors. Again, not independent, nothing as of now, till now. Now I'll come to that. At least 3 directors, and all should be non-executive. All should be non-executive directors. And I'm talking about and, this is plus. Plus and at least 2/3 shall be independent. So first 3 directors minimum, all should be non-executive, at least 2/3 shall be independent. That is the constitution. Then comes the chairman. the chairperson of the Nomination and Remuneration Committee shall be independent director. Okay. Now, like in listed entity, as you see, like non-executive directors can be part of this remuneration and nomination committee. Okay. Now, in that case, this particular committee shall be chaired by the independent director only, not the non-executive director or executive director, basically. Plus, now chairperson of the board of directors. Chairperson of BOD, not this committee. Chairperson of BOD can be appointed member of this committee irrespective of being executive or non-executive. So, chairperson of BOD can be appointed member of this committee irrespective of being executive director. If chairperson of BOD can be any executive director, still he can become part of this committee. Okay, but he cannot become chairperson of this committee. But he cannot be chairperson of this committee. Simple. Now let's talk about the meeting of this committee. This committee shall meet at least once in a year. Now, why once in a year? I'll tell you. Reason, because the role of this committee is to nominate and to suggest, remuneration. Now, you suggest the remuneration either for a year or either for 2 years. You don't, like the company does, don't frequently change remuneration every quarter of the directors. So once a year is fine. At least you can meet more than that. Okay. Now, I'll discuss about the roles which this particular committee follows. Okay. The roles which this committee, has to fulfill for. And very important, because that gives us, understanding what is the role of this particular committee. So I'll touch upon some focus on the roles and responsibilities of this remuneration committee. Okay. So this committee determines the criteria, qualification, okay, and such other things or factors which are required to choose an independent director, okay, or a director for the board of directors. So they define criteria and qualification for directors. Then for every appointment of independent director, nomination and remuneration committee evaluates whether the director is appropriate to be appointed. Okay, so pre-appointment review, you can say. pre-appointment evaluation is performed for independent directors. Okay. Then they decide the criteria to evaluate performance of independent directors. Okay, during the year, how independent director has performed. Plus, they also decide the performance criteria of board of directors. So of independent plus board. They decide about the diversity in BOD. What do you mean by diversity? Diversity means you choose appropriate from each and every sector, like appropriate ratio of male, female, woman and men directors from each and every you can say some might be of different castes, and diversity and inclusion, that you give each and every community equal chance of being part of board of directors. Okay, not only community, but let's say one can be from finance, one can be from engineering, one can be from IT. So a board mixed with all these skills, all the factors. Then deciding successions or deciding or suggesting successions in board BOD. Let's say, for example, they will keep a candidate ready. Okay, if now this time this particular director will retire because of the 75 years. Now this is the director we will be proposing, like this is the person we will be proposing for the independent director, something like that. And the important part is remuneration. Okay. Remuneration to senior management. So that is the role of my nomination and remuneration committee. Clear? Any doubt? Yeah, very good question, Moni. So the doubt is with respect to earlier topic, that was with respect to my corporate governance of this material subsidiary. Now there was one point where I could identify a significant transaction based on the the percentage of total. Now the question is, let's say for example there is an expense. Now to identify whether the significant transaction is an whether the transaction of that particular expense is a significant transaction, can I compare that transaction with the 10% of asset? Let's say for example, company has a huge asset. Now I say this transaction is not significant because let's say any expense transaction is not significant because this is not exceeding 10% of the assets. Okay, but it may exceed 10% of the expenses. So in such scenario, whatever nature of transaction it is, you need to compare with the same. So for example, if you are checking for expense, whether this expense exceed 10%, whether this expense is a material transaction or significant transaction, you need to take 10% of expense only. If you're talking about revenue, then 10% of revenue. You cannot do that. Okay, I want to check whether this expense is a material or significant or not, and then I compare the expense with the asset, 10% of asset or 10% of liability. So in that case, that is not viable. If you want to identify significant, keep the nature same when you want to compare. Okay, another question, very good question, Manini. So over here, I discussed about, an exception, this one, chairperson, or like you can say, so the exception was that chairperson of the board of directors can be member over here, but cannot be a chairperson. Now, it may happen that chairperson of board of directors is an executive director. And earlier I discussed that all should be non-executive directors. So that's why I say that this is an exception to the above also. Usually, in all cases, all the directors or the members of the committee should be non-executive directors, except for one when you have a chairman who is an executive director, chairman of board of directors, basically. This is an exception to that. However, that's why it is said that he cannot be a chairperson. Okay. So, there is one question whether listed entity is required to give prior intimation of every board meeting to exchange. Yes, they are. They provide the details of the board meeting. Like this is on the date that will happen. Even after board meeting, the results are submitted to the stock exchange. Okay. If no further doubts, I'll discuss the next committee. Okay. The next committee that I want to discuss is relationship committee, relationship and stakeholder committee. Okay. Now, as the name suggests, the role of this particular committee is to sorry. Okay. Yeah. As the name suggests, relationship stakeholder relationship committee. This particular committee is formed, to look after the stakeholders relationship, various stakeholders which are there. So I'll quickly provide you the details that this is regulation 20. Okay. Now, again, I'll start with the constitution of this committee. Stakeholder relationship committee. Okay. Now, there should be at least 3 directors. Same. At least 3 directors and one of them okay, should be independent. One of them should be independent director. Now, again, if there are SR shares outstanding, then if there are SR shares outstanding, then 2/3 of the committee members, 2/3 of the committee members should be independent directors. Okay, should be independent directors. Now, at least 3 directors should be there, one being the independent director out of that. Means, when I say at least 3 directors, one being independent, that goes with that if SR shares are not there, one third should be independent. Okay. So how it works is the provision, if you read the provision, it says that, okay, the directors, at least 3 there should be there, with one at least being independent director. Means out of 3, 1 should be independent, 1 should be independent directors. But if there are SR shares outstanding, then 2/3 should be independent. Okay. So 1/3 and 2/3. Then comes to the chairman. Again, chairperson shall be non-executive director. Chairman shall be non-executive director. Okay. Now there is one thing I actually discussed here, that is independent directors. I did not say anywhere that 2/3 or all should be non-executive director. See, here you need to keep a focus, whether it's a requirement for the independent, whether it's a requirement for the non-executive. Now, most of people get confused in that. Okay, whether it's a requirement for independence or whether it's a requirement for the executive. Understand what is the difference between both of them. When I talk about executive director, okay, he's not, full-time participating in the entity. He's there, but not full-time. That's why he's a non-executive. He might be related. He can be from the promoter group, but not the full-time. But when I talk about independent director, again, with the limited time, but he's independent. So if a committee requires independence, okay, then the requirement of that particular committee will go around independent directors. For example, if this committee, stakeholder relationship committee. Now, when I talk about stakeholder, who are the stakeholders? My shareholders, debenture holders, other security holders, can be various financial institutions. Now, when I want to deal with the stakeholders, I don't want person like who is like, for example, non-executive director. I want a mix of both executive and non-executive, because full-time and whole-time directors or executive directors know well that what is going inside and outside. So they will be able to represent. Okay. So that's why I want their participation in this committee. That's why there is no requirement of only non-executive directors. But nomination and remuneration committee, this is something very important, because this nominates the board composition. This nominates the details of the remuneration, where at that particular place I require independence. At that particular place I require independence, and I require that the person who is full-time there should not be part of that. Otherwise, what will happen? Majority of the remuneration goes to the person who is full-time there, like managing director, whole-time director. And if I make them part of this committee, then what will happen is I'm making myself to decide, I'm giving a responsibility to myself to decide a remuneration for myself. That's not correct. Conflict of interest. Okay. I'm doing for myself only. So there is no purpose of committees then. That's why remuneration and nomination committee has the requirement of non-executive, whereas stakeholder doesn't have the requirement of non-executive. I hope it is clear. Just to give you an overview, what is the background thought behind having different things? Most of people might be thinking, okay, like why to keep everyone same? But there is different approach to each and every committee. Now I'll talk about meetings. Okay. The meeting is, again, at least once in a year they should meet. Okay. And again, as I discussed, the roles and responsibilities, just to understand the matters of the stakeholders, various stakeholders, identify their concerns, responding to their concerns, providing them the value. That's the main purpose of this committee. Okay. That was my stakeholder relationship committee. Pretty simple. Then I will go to risk management committee. Okay, risk management committee is part of my regulation 21. Now, what is the role of this particular committee, risk management committee? Risk management committee, basically, if you see, okay, they have a basically, you know, to identify where the risk in the organization or, you know, legal risk, they focus on these areas. Like, for example, to formulate a risk management policy, a framework to identify internal and external risk. Let's say, for example, ESG. Now, tomorrow there is a risk that, you know, additional reporting, ESG reporting requirement comes. In that case, are we compliant? Are we, you know, having a what do you say, procedure or internal controls or a process to report that numbers or report that disclosure? So there's a risk, cyber security risk, sustainability risk, financial risk, business continuity plan risk, okay, disaster management. Their job is to, you know, decide the framework, monitor the framework for the risk management. Okay, they decide, monitor the methodology, implementation of risk management policies, discussing adequacy of risk management policies with the management, keeping the eye on, you know, the risk, materialization of the risk, how critical the risk are, perform risk assessment. So that's their role. Okay. Now, when I talk about the composition of this particular committee, okay, then the composition is 3 members, with majority of them being board of directors, members of board of directors, including at least, okay, 1 independent director, okay, and if there are SR equity shares outstanding, then at least 2/3 of the risk management committee shall comprise of independent directors. So they should have at least 3 member, okay, minimum 3 member, majority of being them, a majority of member being board of directors. Now, see the wordings. I'm using 3 members, not 3 directors. Reason, because in a risk management committee, other than directors can be a member. That's why there is another condition. Okay, majority should be my board of directors. But from these board of directors, okay, at least one should be independent director. At least one should be independent director. But if SR shares are there, again, in case of SR equity shares, this one will convert to 2/3. 2/3 shall be independent. Okay. So that's the composition. The risk management committee shall have 3 members, with majority of being them members of board of directors, including at least 1 independent director. And in case of listed entities having SR shares, then at least 2/3 of the risk management committee shall comprise of independent directors. Okay. Then after composition, chairperson. Now, chairperson of the particular risk management committee shall be member of board of directors. Means he should be director and senior executive of listed entity can be a member of that particular committee. So the chairperson shall be member of board of directors and senior executives of the listed entity. He shall be member of BOD plus senior executive, okay, of listed entity. He should be member of BOD plus senior executive of listed entity. Okay. Now, when I talk about member of BOD, why? Reason because board of directors know very well about the risk. That's why the chairperson should be member of BOD. I'll talk about then meeting. The risk management committee shall meet at least twice a year. So this is the committee where I am talking about twice a year. Okay. In other stakeholder and nomination once a year, here twice a year. Now the quorum for this meeting shall be either 2 members or 1/3 of the members. So either 2 or 1/3 of the members. Whichever is basically higher. And out of these both, one member should be from board of directors. So one should be director basically. Okay, one should be director. Okay, and whichever is higher, either 2 or 1/3. Okay, that is the quorum for the meeting. Now the meeting of risk management committee, okay, shall be conducted in such manner that there should not be gap of more than 180 days between 2 meetings. So when I talk about 2 times, okay, 2 times a year, but with gap of not more than 180 days between 2 meetings. So it shouldn't happen that I carry the first meeting in on 1st April 2021 and the second meeting on 31st March. No, there should not be more than 180 days gap between 2 meetings. Okay. Now, this particular provision, what I'm talking about, risk management committee. So, this particular regulation is applicable to not all the entities, listed entities, but top 1,000 listed entities, okay, based on market capitalization of immediately preceding financial year, and high value debt listed. So these are the two entities to which this is applicable. Now question may arise, what is a high value debt? So how do you define a high value debt listed entity? Okay. So there is a definition, or detail provided what is a high value debt and listed entity, okay, in the regulation itself. Sorry. Now that again, that particular detail high value debt listed entity is basically based on the debt value that is there in the market of that particular listed entity. It changes from time to time. It based on the circulars and again entity also. It depends upon the type of entity. It can be an infrastructure investment trust or something different type of entity. So the amount changes for each type of entity basically in that. Okay, so when it's not pretty simple, but yeah, it has a different what do you say, definitions for different entities. Okay, so that was majorly about the risk management committee. Now remember in previous lecture we discussed about the vigil mechanism. There should be a vigil mechanism. Audit committee, in audit committee we were talking about something about vigil mechanism. So we talked about the audit committee shall have over here, sorry. Yeah, in section 177 audit committee we discussed about vigil mechanism. There is a vigil mechanism every listed company or class of companies should have, and these were the class of companies. That was as per section 177. But when I talk about regulations, SEBI LODR regulations, under SEBI LODR regulation, there is a regulation 22. Okay, there is a regulation 22 which says that every listed entity shall formulate a vigil mechanism, okay, or whistleblower policy for directors and employees to report genuine concern. So this is applicable to every listed entity as per regulation 22. Shall have a vigil mechanism / whistleblower policy. It is pretty much same. If you see the section 177, it says that every listed company or such class of companies. Okay. Now, when I talk about every listed company, that has been replicated in regulation 22 of SEBI LODR also, that every listed entity shall have this vigil mechanism on the same line. So there is nothing different here. Clear? Any doubt? Okay. Manini, can you provide some more detail with respect to the question of privilege to CP something? Can you explain CP here, like in which context we are talking about? Salendra, yes. If yes, that your question is correct. That when I talk about one, it becomes 1/3 independent director. Okay, so I think Amanini, I explained like why there is a different, composition requirement for different kind of committees in SEBI LODR. Do let me know if you have any further doubt on this. Any doubt, guys? Any doubt till now? Any of the point that I have discussed? Understand the logic. You will learn. There will be no requirement to mug up the things. Understand the logic, why it is there, and it will become easy. Trust me. Nomination and Remuneration Committee. Yes. So you want to understand why we have a board of directors in this? So what is the basically question with this particular committee? Okay, you're asking about chairperson of the board of directors. Why chairperson of the board of directors have this privilege? Okay, fine. The reason, because see, nomination and remuneration committee, it decides how how to choose a director, what should be the constitution of the board of directors. And the chairperson of the board of directors is the person who needs to look out, okay, this is a person, this is his performance, this director was independent, this is his performance. Now we need to, these directors are getting retired. That's why to have the word, okay, for example, if I want to have a word of board of directors to the nomination and remuneration committee, okay, then either I make any director part of that so that, there should be appropriate say from that. But by including the chairperson of board of directors, what I do is in a nomination and remuneration committee, I create a representation of whole of the board of directors, because chairperson is aware about each and every director, his qualifications, his experience, his performance, what we require in board of directors. Because today chairperson knows, okay, I require this in my board of director combination. I require more independent. I require more non-executive. I require this particular expertise, experience. That's why it's very important to have a chairperson of BOD in nomination and remuneration committee. A recent example. Okay, so I interact with a lot of directors. So one of the person I interacted with, they were discussing, okay, now they need someone with a skill of ESG and cyber security onto their board. So accordingly, the chairperson had, okay, now, okay, we get a lot of queries of cyber security and ESG, and there is a lot of discussion happening in the board of directors, but we don't have an appropriate person to represent or who can have such skills to discuss that. So what they did is they decided, okay, let's have an independent director who should have these skills. And this thing, particular chairman communicated to the remuneration and nomination committee. That's why it's very important that, chairman reflects what is required in the board of directors to the nomination and remuneration committee. I hope I'm clear. Okay. Now, the last part that I want to cover here is the related party transaction. Very important part. Reason, because related party transactions, you can say it's critical for every listed entity. Okay, so very, very critical. So basically, related party transactions are governed by various regulations. They are bifurcated across SEBI LODR. Some requirements. So I'll point it out here. Regulation 23, which is the main. Then you have a 27. Then you have a 46. Okay, and you have a schedule 5. So there are various requirements. Okay, so the first requirement is that quarterly compliance report for the related party transaction. A quarterly compliance report, okay, on corporate governance is required to be submitted to stock exchange within 21 days. Within 21 days from end of each quarter. Okay, from end of each quarter. Now, a quarterly compliance report on corporate governance is required to be submitted. Fine. What is it? It has to do with the related party. So, in that report, quarterly compliance report, that report should contain details of all material related party transactions. Okay, related party transaction, material related party transactions. Fine. Okay. So that is one that is there. Now, second question comes is like, what is material over here? Okay, when I talk about related party transaction, material related party transaction, what is material? Now that is, the materiality I'm talking about here, it's covered under the regulation 23. What regulation 23 says that, okay, now listed entity shall formulate policy on materiality of related party transaction. So it is the job of the listed entity to formulate a policy on materiality of the related party transaction, which should have a clear threshold. Okay, so that should have a clear threshold to identify the materiality. Now this policy should be approved by BOD. And that should be reviewed once every 3 years. That should be reviewed once every 3 years at least. Okay, so that should be approved by BOD and reviewed by BOD once every 3 years. Okay, now this is there, but what if the entity says that, okay, all the transactions about 10,000 crores are material, then what will you do? In that case, there is another requirement which defines the materiality. So in that case, there is again, although the entity has a right or liability to frame materiality, but if transaction individually or together with previous transactions. Let's say, for example, there is a loan. So previous loan transaction plus this loan transaction. Okay. During a financial year exceeds 1000 CR, 1000 crore, or 10% of my annual consolidated turnover. Annual consol turnover. Okay. As per the last audited financial statement. And whichever is lower will become my threshold. If exceeds this particular thing, then this will become material. So individually together, greater than 1000 crore or 10% of annual consolidated turnover will make it material. And if there is a brand usage royalty transaction, if that is a brand usage or royalty transaction taken during the year, okay, for that, the limit is 5%. So this 10% will be 5% if brand or royalty transaction. Okay. And further, this is not applicable in, I'll do one thing, I'll do it here. What I do is, now exception to whole of this is direct 5%. There is no 1000 CR limit. Exception. So for brand royalty, it will be 5% of turnover, annual consolidated turnover. Annual consolidated turnover. So 5% of annual consolidated turnover is brand royalty. No 1000, no 10%. Okay. Directly 5%. So that is a threshold for the materiality. And all related party transactions and subsequent modifications require prior approval of audit committee. We discussed that in the audit committee. Remember the role and regulation, the responsibility of audit committee. Approval or modification of RPT. That is my regulation 23 that we are discussing now. That all related party transactions require prior approval of, and all related party transactions or modifications require prior approval of audit committee. Okay. Audit committee again has a right to define material, what is material modifications, and audit committee can decide their own threshold. Okay. If entered individually or together, together. But having said that, again, for the audit committee also, if for the material modification, they have to follow this particular threshold also. Okay. Now, in another case is that a related party transaction to which the subsidiary of a listed entity is part, but listed entity is not a part. Okay. So, for example, related party transaction involving subsidiary but not listed or holding, basically. So related party transaction where subsidiaries are involved, okay, but listed party is not a party, then in those transactions you require a prior approval of audit committee of listed entity. Although listed is not a party, still prior approval of audit committee of listed entity is required if value of such transaction together or with other previous transaction, if value exceeds 10% of annual consolidated turnover as per the last audited financial statement. Okay. Now, when I talk about annual consolidated turnover, that is of my audited financial statement of listed entity. Okay, but this is the one over here. Then there are other requirements of audit committee that audit committee can grant omnibus approval. We saw the roles and responsibility of audit committee. Okay, where the audit committee has a power to decide the omnibus approval for the related party transaction. But again, remember we talked about in audit committee that if there is an omnibus approval, then mandatory reviews still become part, or like if there is an omnibus approval, then still they need to check for total transactions. In audit committee chapter, audit committee one lecture, we discussed that with approval and modification. So although it's an omnibus approval, still they are required to review on an annual basis. What is the disclosure of RPT, everything in detail. So we discussed in that particular lecture also. Okay. That is with respect to the omnibus approval requirement. So, okay. Now these particular regulations that I'm talking about, the transactions of materiality, approval, prior approval. So there are exemptions to this, exception to this. Now exception is very simple. These regulations are not applicable to transactions between two government companies, okay, transaction between holding and wholly owned subsidiary, okay, or transaction between two wholly owned subsidiaries, of listed. Okay. So that is with respect to related party transaction. Again, listed entities are required to make disclosures every 6 months from the date of publication of standalone and consolidated financial statement with respect to related party transaction. So these are the requirements of related party transaction. Any doubt? Any doubt with respect to the related party transactions? Guys, very important to understand these regulations. Okay, very, very important. Focus on each and every word. Reason because whatever we are discussing, let's say, for example, in any of the committee, like it's a member, board of directors, what is the constitution, It's a constitution of member of directors. Again, when I talk about directors, board of directors, okay, then 1/3 of independent executive, people easily get, students said easily get confused between executive, non-executive, independent requirement. But understand the logic why that is there, and you will be very easily, able to remember the particular concept, I will say. Also, I'll request, please provide your feedback. Please provide your feedback. It's very, very important for us to understand what additional you require and what, additional we can give to you. It's very important for us. So use your mobile app, use your portal, and please provide the feedback. I hope you liked the lecture, and please simultaneously take the notes after this lecture. I will also be uploading the notes to the audit committee, whatever we have discussed. Okay. That will be available on the portal. You can download it, but prepare your own notes also, refer the study material, and after the lecture, please revise whatever we have discussed now. That will give you a enhanced clarity. Trust me. Yeah, I will be uploading these particular questions and notes after this particular lecture. This lecture only. Yeah. Okay. Thank you. Thank you, everyone. Have a nice day. See you in next lecture.